Hello, everyone. Welcome to the July 14th, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, CFA and founder and CEO of IndiWealth. Today, we're just going to talk about those hot button topics. We're into the summer here. The summer is usually a little slower. Honestly, I find that to be less and less true at this point now. It's a 24/7 market. There always seems to be something going on, but I'm going to tell you the things that are most important to me. So let's get going. Let's start with first of tariff talk. We had a new round of tariff talk come through this weekend. Again, it's aggressive. 30% tariffs I've heard in Canada and Mexico and all that stuff. Judging by the market's reaction this morning, we're tuning him out. It does appear at this point right now that the market is saying it's not going to happen. Because if these were to be implemented, it would be pretty aggressive on input costs, pretty aggressive, probably a reacceleration of inflation in some way, shape, or form, or a cut in spending because things were getting too expensive and people just stopped buying things. So market's really taking it right now as saying, we've seen this movie before, we know what's going on, we know what's going to happen. We're going to probably more likely to tune them out, which if you watched my monthly update outlook that was just on the end of June, that's kind of what I was saying, is that the second half trade deals and tariff talk, I think, are just going to be less important unless they're actually implemented, and unless they're implemented in a way that seems like it's going to happen for a while. The market's going to play a little chicken until then. And I think right now the market is saying we don't think these things are going to stay. On the economic side, retail sales and consumer sentiment comes out this week. Really, I pay attention to more the trends here, and maybe not even in the way that you would think. Is I like to think about retail sales as what we're doing, and consumer sentiment is how we're thinking, right? And those things can be very different sometimes. What we say versus what we do. Consumer sentiment is what we're saying, and usually there could be an area of worry there. Honestly, in the areas of worry, if the markets had some declines during those periods of time and the consumer sentiment is negative, that's usually a signal to be buying. But really, I use these two in tandem to saying, what are we saying versus what are we doing? Is there a difference there? Amazon Prime just came out. Prime Day just came out and was done, and Walmart and Target and others did their shopping things as well. And the numbers were okay. They certainly weren't falling off a cliff. So I would say the retail sales data, that's what I'll be paying attention to, is are we continuing on the same path of we're actually doing stuff, even though we may be saying that things aren't so great. So just looking for trend changes there, and if anything comes up. It's earnings season, number 3. We're finally here. We're going to hear actually about companies talking about the business environment and not really paying, hopefully, as much attention to number 1 about what's going on in the Fed, what's going on with government. These are what companies, these are what we invest in. And I want to hear from them, and I want to understand what they're looking at and what they're talking about the most. This week is heavy on financials companies, banks, investment banks, asset managers, these types of things. So what you really get a sense of is what's the loan situation, because you get a sense of the business environment from there. What I pay a lot of attention to that maybe doesn't get as much publication is credit card spending data. JP Morgan, Bank of America, Wells Fargo have very, very large credit card books. And their spending patterns can tell us a little bit more about, again, going back to those retail sales and consumer sentiment, what the consumer is actually doing. So paying attention to those, but then, just general health of the overall banks, what's going on with loans. I like that they kind of started, because it kind of gives us a barometer of what everyone else is doing, because everybody goes to a bank when they need money. The other one is Netflix. That comes out on, I believe it's Thursday, but it's coming out this week. And Netflix is an interesting animal in the effect of it tends to be very subscriber driven. That tends to really fluctuate what the market thinks about a good or bad quarter. Is how many net subs did they gain? Did they lose subs? How many gross subs are they doing? Those kinds of things, and less on their traditional financials like earnings and cash flow and all that stuff. I pay a little bit of attention to both. We do own Netflix here in our indie stock model. So it's a company that we think is long term sustainable, long term efficient, really good at what they do. We don't get as terribly concerned about quarter to quarter subscriber numbers as maybe the market would indicate. But if we do start to see a slowing trend, we want to pay attention to that. So that's what we'll be watching for. And we'll be watching for the commentary they give with regard to what this next quarter is starting to look like. Lastly, tomorrow we will be launching what we're calling our second pod series, which we're calling Stocks and Flicks. That one's going to be a little bit more fun. We're just going to have some fun with it. If you know me at all, you know I talk basically in movie quotes. So that's what we're going to do. We're going to have a movie quote that leads into some subject in the stock market. So really excited. I'm not going to give a lot away right now. We'll do our first one tomorrow. We'll launch it tomorrow. Really excited about it though, and that one's going to be fun. So tune in, please. And if you like what we're talking about here, please feel free to like and subscribe and visit us at www.IndiWealthManagement.com. But until next week, thank you very much for joining us, and we'll see you next time. Take care.